What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. In today's video, we're going to take a look at some of the biggest trades from the Wallstreetbets forum over the past week, so we can learn from other traders' experiences. Before we get into the video, make sure to smash that like button. Let's try to get 1,000 likes on this video. First off, we have some gain porn from user PlyStarChos. This Wallstreetbets user went all in on one stock, NLST, which makes up 100% of his portfolio diversity. His average cost basis was 81 cents per share. Since then, the share price has increased more than 800% to $7.55. This has netted him a massive $75,000 gain. NTLS, or Netlist, is a small computer storage device manufacturing company whose stock has experienced some unusual price action over the past few months. For most of 2020, Netlist was a penny stock with a share price below $1. But recently, shares have gone to the moon and now sit above $7, giving the company a $1.7 billion market cap. The OP explains that Netlist is suing Google over an intellectual property issue from 12 years ago. Google is a tech giant with a market cap in excess of $1 trillion. With Netlist being a penny stock, the potential settlement could be huge. As reported by Yahoo Finance, a federal appeals court recently affirmed the validity of Netlist's patents, which they claim Google has been infringing on. This favorable news caused the stock to skyrocket almost immediately. This Wallstreetbets user had the foresight to go all in on the stock before the development happened. This allowed him to bag options-like gains on a stock position. But he's not willing to cash out these profits just yet. He intends to reinvest those profits to buy shares of AMC. Congratulations on your epic trade. Speaking of AMC, our next entry comes from a Wallstreetbets ape who entered the field to collect real-time data on AMC's business performance. User Dragon Ben J attended a movie at an AMC theater in his local area. He posted a detailed write-up describing the company's operating performance based on his observation. Even before he entered the building, things were not looking good. Despite the reopening of the economy, the parking lot was only about 1/8 full. There were no staff selling tickets, so everyone had to buy them from a single automated ticket machine that was working. Security was very lax, so it's probably possible for someone to walk into the theater without buying a ticket. Once he got into the movie room, there he counted a grand total of 22 people in the theater that seats more than 100. Tickets for 2 people cost $24. Adding popcorn and a soda brought the total bill up to $40. For a family or even a couple, it would be cheaper to purchase the movie from a streaming service and watch it at home. While the Black Widow movie set a post-pandemic record, its box office was far below pre-pandemic Marvel releases. This can largely be blamed on streaming services such as Disney+, which allow subscribers to watch the movies on demand. His findings make him bearish on AMC as a company, and he says they may not be around in a couple of years' time. Despite this, he is still an AMC shareholder. He bought his shares at $10 and sold 75% of his position at $60. He's still holding on to the remainder of the position in anticipation of another short squeeze. Next off, we have user #1 Stunna, who has been having a great time in the markets recently. He bought calls on GameStop and Palantir and bought puts on the SPY as a hedge. As the positions moved against him, he dollar cost averaged his way down. The majority of his GameStop calls expired on July 16th. He had a variety of different strike prices, with the most degenerate being 800. On July 16th, GameStop stock closed at $169, which is below even his lowest strike price of $180. Thus, all of his positions expired worthless. His SPY puts also expired on July 16th with equally disastrous results. His highest strike price was $420. SPY closed that day at $431, leading to a total loss on his puts. His only position that was not a disaster is $8 strike Palantir calls expiring on November 19th. While these calls are deep in the money, he needs the stock to increase past $23 per share for him to make back the $15 of premium that he paid. With 4 months left to go, there's a chance that this position may turn out to be a lone winner in his otherwise disastrous portfolio. It's also possible that Palantir fails to rise and his account continues to be a sea of red. To date, he is down roughly $238,000 on these options positions. Despite just losing more than most people's entire life savings, the OP decides to buy even more chips and re-enter the casino. He bought 70 contracts worth of GameStop call options expiring in July and August. While these calls are still out of the money, at least they are more reasonable than the $800 strike prices that he bought last time. We wish you luck on this play. Next off, we have user TrashTalk89, who has suffered a total loss on his MVIS position. He owned 299 contracts of MVIS calls with a $30 strike price expiring on July 16th. MVIS, or Microvision, is a small technology company with no profits and very little in the way of revenues. The stock price mooned throughout the second half of 2020 and early 2021 on vague speculation that the company could be acquired. It also experienced multiple apparent short squeezes. However, this has not happened and the stock bled out most of its gains. On July 16th, the stock closed at $13.62 per share, making its $30 strike calls expire worthless. Fortunately, this was only a small percentage of his portfolio, so he should still be able to make a comeback. We wish you luck. Next off, we have another near total loss from user Lucky Skills. He wanted to play the reopening and spent approximately 100% of his portfolio on American Airlines calls of various strike prices and expiry dates. With economies reopening around the world, this seemed like a surefire way to play a travel rebound. The OP thought it would be an especially good recovery play given the bullish market cycle we appear to be in. However, concerns about the new virus variants and the company's excessive debt load have caused the stock to tank 24% from its recent highs, and shares now trade for a little under $19 per share. This is below even his lowest strike price of $23 a share. The airline has $48 billion of debt and lease liabilities, as well as $7 billion of pension deficit. This makes it the most indebted company out of all the US airlines. In total, his mark-to-market losses add up to roughly $95,000. Not all hope is lost. Many of his calls have long durations, with his furthest expiry being January 21st, 2022. So there is still hope for a turnaround. We wish you luck. Next off, we have user PSY Tokine, who wishes he never bought Wish after suffering a gut-wrenching $182,000 decline. He owns leaps on Wish with strike prices ranging from $7.50 to $10 a share. Wish is an online e-commerce platform which facilitates transactions between buyers and sellers. The company has grown fast over the past couple years as they have spent aggressively on marketing. However, this growth has come at the expense of profitability, and they've been posting large losses. They IPO'd in December of 2020, and the stock has declined 60% since then. The OP initiated his $420,000 investment when the stock was in the $14 range, and averaged down to $11.95. He is still bullish on the company long term. Wish is known for selling cheaper products, so has the potential to become the dollar store of the internet. Their easy-to-use app interface has gamified the shopping experience, and can potentially help drive repeat purchases. While his mark-to-market losses have undoubtedly been painful, most of his calls don't expire until 2022. There's still a chance that his investments end up in the green. Alright guys, that wraps it up for this video. What do you think about these trades? Let us know in the comments section below. If you enjoyed this content, make sure to hit the like button and subscribe so you don't miss future uploads. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.